Zach Flood, the co-founder of Kenorland Minerals. We're a project generation company focused on grassroots exploration in North America, and our flagship asset's a large 4% net smelter return royalty on a multi-million ounce high-grade gold deposit in northern Quebec that's owned and operated by Sumitomo Metal Mining. So as I mentioned, we founded this company in 2016. So we've been around for a while. We were private for about 4 years before going public in 2021. Currently, we still only have about 78 million shares out. The beauty of the project generation model is the shareholders are relatively protected from dilution that affects a lot of other exploration companies. Currently, we're sitting on around $16 million in the treasury, so we're well financed. We've got another around $8 million worth of marketable interests, and our business model is revenue generating. Last year, we brought in about $5 million through management fees, cash payments, and some other streams there as well. Looking at our share ownership structure, just like to point out Sumitomo Metal Mining does own 10.1% of us, and Centerra Gold owns 9.9%. We've got a large management and insider ownership of around 24% as well. So getting into where we are, what we do, we've been focused in North America since day one and really focused on grassroots exploration. Lately, we've been concentrating more of our efforts in Ontario and Quebec, looking for gold systems under glaciated overburden. Mostly this is in the Western Superior Province. We're looking for high-grade gold systems near infrastructure, typically concealed under cover. We have a huge exposure in mineral rights and royalty interests, over 2 million hectares of ground in North America, and we've been able to scale it up because of the project generation model. Again, sole financing all that exploration would be very difficult in your typical traditional exploration company. So I'm just going to start with the royalty. Obviously, it's driving a lot of value right now in our company. It's a 4% net smelter return royalty. There's approximately 0.75% that can be bought down for $13 million. It covers around 40,000 hectares of ground in the Frotet-Evans Greenstone Belt, about an hour north of Chibougamau. It's totally road accessible. There's another big development project up there called Troilus. We discovered this with Sumitomo Metal Mining in 2020. We put the first drill holes into it. There was no previous mineral occurrences there, no previous drilling. This was a total grassroots discovery. We just put out a maiden resource estimate of 2.55 million ounces at 5.47 grams per ton. That's off of about 130,000 meters of drilling, so there's still plenty of upside here. This is just getting started. Looking at a plan map of the drill results to date, you can see there's 1 to 2 kilometers of strike, multiple high-grade vein structures dipping steeply to the north there. Looking at a cross-section, again, you can see these steeply dipping planar vein structures. The continuity of high-grade gold here is very robust. And I'd just like to point out the deeper veins there, the R11 especially, which is not included in the resource. Really good intercepts down there, 7 meters at 16 grams, 6.7 meters at 30 grams, off of very limited drilling. Obviously, there's a lot of room to grow here. And then looking at a long section, again, just to draw your eyes into the lower parts of the system there, it's wide open. There's economic hits out there that haven't even been incorporated into the geologic model, let alone the mineral resource estimate. So again, we see clear potential here to grow this into north of 5 million ounces. And again, if you're in Quebec or Ontario, there's a handful of deposits that are of that scale and grade. They're typically all producing gold mines owned by the majors, and the royalties on those are owned by major royalty companies. So the maiden resource estimate, again, there's about 127,000 meters of drilling included in the MRE. For comparison, Windfall, I think when they put out their first MRE, it was about 1.6 million ounces. Today it's over 7 million ounces of gold, so these things tend to grow over time, and I'll show you a chart of that as well. The discovery cost here was extremely low. It was about $20 per ounce Canadian, which indicates it's a very robust system with strong continuity and scalability. scalability. Putting the drill results on there, again, looking at those lower sections in the R10, R11, R12 areas, which have not been incorporated into the MRE. There's plenty of gold here that they just couldn't categorize due to the drill spacing. So really low-hanging fruit to bring us probably north of 3.5 million ounces. And then it's not a far stretch to get to that 5 million ounce when you start to infill a lot of the step outs there as well. So again, that's what gives me confidence that this is easily north of 5 million ounce kind of potential and most likely to grow much, much greater than that over time. Looking at the upcoming milestones, so we announced the MRE at the end of 2025, 2026 and 7, Sumitomo will be conducting some sort of internal economic studies. They don't plan to put out a 43-101 compliance study, but there will be a decision on developing a decline sometime at the end of 2027, 2028. That would be a pretty significant amount of CapEx to put this in down to around 300 meters vertical depth, and then from there they could extract a bulk sample. And this is a huge de-risking event for the project, obviously, so we'll keep an eye on seeing where that goes. The growth potential of high-grade orogenic gold systems is pretty obvious when you look at a lot of the mines that are out there. On here we have Macassa, Lamaque, Windfall, and Young-Davidson, all starting at around, we just picked 2016 as the year to start. And over time, that historical production plus reserves and resources goes to the upper right-hand side. This is because these systems are typically narrow and high grade. They're very expensive to drill out, so a lot of these companies just start mining them, and then they'll continue to grow the resources as the mine is developed. So you can see where Renault sits there as a starting point, and again, that's kind of just again highlighting the track I think we're on here. And then in terms of the royalty space itself, I mean, I'm sure everyone understands how competitive it is out there for these larger royalty companies to get their hands on an asset such as this. Another good example of a project generator that had a kind of a tier 1 or world-class royalty asset was Origin. They held a 1% on the Silicon project, now called the Arthur project in Nevada. You can see there where their maiden resource estimate came out, and then over a couple of years, their share price increased dramatically until they were purchased by Triple Flag, and for around 1.77 times NAV. So that's the other thing is these tier 1 royalty assets will typically trade at multiples to NAV. So there's big premiums these companies have to pay for them, and I think the market recognizes that as well. I'm just going to talk about some of the other exploration in our portfolio. As Brian mentioned, a lot of the value in the company is that royalty, and then there's a huge amount of optionality in the company as well through all the grassroots exploration we're doing out there. It's all very similar to how we found Renault. We start with a big land package. We explore it very systematically, typically driven by geochemical surveys. And we are looking for new mineral systems, not trying to follow up on historical results typically. So here's the South Uchi project. It's about a 100,000 hectare land package in the Red Lake area. We've optioned it to a private company called Oronova Resources. We have a 30% carried interest to PEA on this. We already pulled out 2% uncapped NSR, and we do have a large equity interest in that company as well, which is planning to go public any week now here. Over multiple years of exploration, we defined a large-scale golden till anomaly in the center of the land package there. What's interesting, just like Renault, there was no previous mineral occurrences in that area. There was no previous drilling, so we knew we were on to a potentially a new discovery of a gold system that hadn't previously been recognized. So the phase 1 drilling occurred on the western side of the Papanga target area. We intersected widespread gold mineralization over a few kilometers in strike. We stepped out to the east in the volcanics and hit some higher grade mineralization with visible gold on a structure. And the phase 2 drill program that we completed at the end of last year followed up in that area, and as well as stepping out to the north there. So, without rattling off some of these intercepts, we haven't hit an economic drill hole. There hasn't been indications of an economic discovery yet, but what we see here is a very large-scale gold system There's gold over 8 kilometers east-west. We're finding gold in new areas with every drill program. And, this is how exploration works, right? You kind of have to learn as you go and test new ideas, but certainly we're dealing with an actual large-scale gold system, not just like small gold occurrences here. So very interesting. Keep an eye on this. We'll have news coming out on that this week as well. Same thing up in northern Quebec in the James Bay region. We had defined a large-scale gold and till anomaly. We vended this project a few years ago to a company called Targa. We hold a 3% uncapped NSR on this, and we're currently the operator. We just announced about a week ago the results from the maiden 3,600-meter diamond drill program. Again, up here, no previous exploration, no mineral occurrences, no historical drilling. All of these drill holes, or at least 7 out of 8 of the drill holes, intersected widespread low-grade gold mineralization, but also some extraordinary visible gold in one hole, which reported 0.3 at 166 grams per ton. So again, first pass drill program. There's a gold system here that's about 4 kilometers east-west and over 1 kilometer north-south. It's all under glacial overburden. So, we'll see where this goes as well. I'll expect there will be a follow-up drill program there this year. And then lastly, there's these 2 projects in Ontario in the Wabigoon area that are optioned to Centerra, where we have a 30% carried interest to pre-feasibility study. Again, pulled out a 2% NSR on these already. And we do have a drill program planned at Western Wabigoon early this summer. After a few years of systematic exploration, we've defined multi-kilometer long gold and till trends, both on the West Wabigoon project and the Flora project. These are areas with very limited historical exploration. Again, the geochemistry is indicating that these systems have scale. And we're looking forward to drill testing this probably in Q2 with Centerra backing that. So just finishing off here, Kenorland's share price performance, you can see right where the chart goes from flat to starting to increase. That was where we announced the conversion of our 20% interest in that Renault Gold, or in the Frotep project, to the 4% NSR. I think at that point the market recognized what was happening. Again, the royalty space is it's very interesting right now. I expect there to be continued consolidation and M&A in the sector. These royalty companies are going to be producing a huge amount of cash at these gold prices. Owning a royalty doesn't cost you anything. That sector is defined by M&A. It's just trading pieces of paper, basically. So, stay tuned for an exciting year, I think. Thank you very much. Cheers.